Good morning, it's Friday the 22nd of December here in London. This is the Bloomberg Daybreak Europe podcast. I'm Caroline Hepker. Coming up today, the Chancellor Jeremy Hunt tells Bloomberg that more tax cuts could be on the way for the UK economy. Elon Musk takes aim at public markets and says that indexing has gone too far. And we have a special report on why weak demand for used electric vehicles is now making new ones a tougher sell. Let's start with a roundup of our top stories. Jeremy Hunt says that falling debt interest payments might allow for more tax cuts in the spring, boosting the governing Conservative Party in what is likely to be an election year. Speaking to Bloomberg, the UK Chancellor said that he will cut the tax burden if he's able to. Here's what he told our colleague Lisa Abramovitz.
We would like to cut the tax burden more if we're able to do so, but we won't be in a position to do that until much closer to the spring budget. We haven't announced a date for that yet, but we won't find out what the latest forecasts are from the Office of Budget Responsibility to know whether we're in a position to do that for some time. But we would like to bring down the tax burden in a way that is responsible if we're able to do so.
Jeremy Hunt speaking to Bloomberg. He and the Prime Minister Rishi Sunak are under pressure from members of their own Tory party to cut taxes in order to boost the party's electoral prospects. Hunt added that there was still work to do in cutting inflation, which has fallen to 3.9% from 11.1% last year, and that it remained the government's immediate priority. The Czech Republic has declared a national day of mourning on Saturday after the worst shooting in its history. At least 15 people died after a 24-year-old student opened fire at Prague's Charles University. The country's Prime Minister, Petr Fiala, is calling on citizens to support each other through the tragedy.
In this difficult moment, we should all come together and show our mutual understanding, and in this way express our respect towards the victims of this brutal crime.
Czech Prime Minister Petr Fiala speaking there through a translator. According to Prague's police chief, the gunman legally owned several weapons, but officials say that there is no evidence he had links to international terrorism. A sales ban imposed on the world's most valuable tech company could create a headache for consumers approaching the festive period. And more now from Bloomberg's Tom Busby.
As part of that patent dispute settlement, Apple today stopped selling the Apple Watch Series 9 and the Ultra 2 on its U.S. online store, and it'll have to stop selling them at its 270 physical U.S. stores this coming Sunday. Apple Watch SE models that do not have the ability to measure blood oxygen, those are still on sale. But in another potential problem, at least for Apple customers, the company is also no longer repairing older smartwatches that are now out of warranty. Tom Busby, Bloomberg Radio.
Nike says that it's looking for as much as $2 billion in cost savings by dismissing workers and simplifying the trainer company's product mix amid a weaker sales outlook. The story from Bloomberg's Charlie Pellet.
The sportswear and sneaker giant said it will incur restructuring charges of $400 to $500 million in the current quarter, quote, primarily associated with employee severance costs. In the statement for the quarter ending November 30th, CFO Matt Friend said the company sees a softer second-half revenue outlook and is focusing on profitability and disciplined cost management. Sales in the key Greater China region came in lower than expected, while earnings per share surpassed Wall Street's estimate. In New York, Charlie Pellet, Bloomberg Radio.
Banks borrowed a record amount from the Fed's newest backstop facility this week as increasing wages on rate cuts made it more attractive. Data from the US Central Bank showed an all-time high of $131 billion was borrowed from the Bank Term Funding Program. Launched amid this year's banking crisis, the BTFP allows banks to borrow funds for up to 1 year with treasuries and agency debt used as collateral valued. In terms of Elon Musk, he's lashed out at the state of US financial markets. Speaking to ARK Investment Management CEO Cathie Wood during a discussion on the social media platform X, he complained about the scrutiny facing listed companies.
There's a lot of pressure, immense pressure on a public company to not have a bad quarter. So this can actually result in a less efficient operation where you're going to great lengths at the end of a quarter to not disappoint people. That's just how it goes. And then you've also got a long-term challenge with public markets where a lot of the analysts following companies have a time horizon that is maybe only a year or two. Mm-hmm. It's rarely more than a few years. And so they literally don't care, because then their incentive structure is short-term. They do not care about what your long-term outcome will be, because their career is dependent on how you do in the short term.
The complaints add to a litany of grievances that Musk has raised over the years about the trade-offs of tapping public markets to build some of his many ventures. The Tesla and SpaceX CEO also weighed in on passive investing, saying that the trend has gone too far, adding that somebody actually has to make an active decision. Tesla is currently the second largest holding in Wood's ARK Innovation ETF. So that conversation between Elon Musk and Cathie Wood. Now, just lastly, Bloomberg has learned that Barclays will delay the final decision on its bonus pool for top investment bankers this year to reflect last-minute business. Sources say that staff are arguing that capital markets activity is picking up and their bonuses should therefore account for that. The decision on bonuses has now been delayed until the new year. So those are a few of our top stories this morning for you. In terms of the markets, the MSCI Asia Pacific Index currently down 0.2%. Stock futures, US Stocks 50 futures down 0.2 this morning, and the 10-year US Treasury yield up barely a basis point, 3.89. So those are the markets this hour. Well, this was a fun read, though, on the Bloomberg terminal. I wonder whether you've had a chance to have a look at it. A big AI trade rescuing the stock market, a niche bet on Bed Bath & Beyond sinking some amateur day traders, and then the Buy China call backfiring. These are all amongst Bloomberg's top picks for the 11 biggest trades of 2023. The market events that either busted careers or made them. Crypto, of course, diehards got a shot at redemption with the huge Bitcoin swing upwards. It's a really great deep dive into who made money, who didn't. Bill Ackman betting big against 30-year treasuries between August and October. He got it hugely right. Almost everybody got the bet on China wrong. The comeback did not happen. Also, of course, the sneaky buy India trade, now very, very popular, not so back in January, of course. You can read all about the top trades on the Bloomberg terminal this morning, looking back at 2023. Let's hope for good luck in 2024. Meanwhile, one of our top interviews now. On yesterday's show, we previewed news about this new agreement between the UK and Switzerland to recognise each other's laws and regulations in financial services. So the Chancellor Jeremy Hunt and his Swiss counterpart signed that treaty in Bern yesterday, which will ease post-Brexit market access for firms, including for banks, insurers and asset managers. Well, after the announcement, Jeremy Hunt spoke to Bloomberg's Lisa Abramovitz about the deal, the UK's fiscal outlook and also that possibility of UK tax cuts. Here is Jeremy Hunt.
This is a very groundbreaking agreement. It's never happened anywhere in the world before, and it links two of Europe's largest financial centres, the City of London and Zurich. And instead of doing what previous trade deals and mutual recognition deals do, which is try to align legal frameworks, what we're doing here is we're saying that in the UK, we will allow Swiss companies to operate following Swiss regulatory structures and rules. And in Switzerland, they will allow British-based companies to operate following UK rules and regulations without the need for both countries to align their legal frameworks. And so in terms of the wholesale insurance market, asset management, banking, this is a really significant deal, but also could be a template for the kind of deals that the UK does with other countries going forward.
That's exactly where I was going to go. Chancellor, who's next? What other country?
Well, we're open to discussions with anyone. What I would say is it was much easier to do this deal with Switzerland because there's a lot of trust between Switzerland and the UK. We've been friends for a very long time, and there's a lot of confidence in each other's legal systems and regulatory structures. But we're open to this kind of discussion with any countries all over the world. Anything that boosts choice and competition whilst respecting our sovereignty and our ability to make our own rules and regulations is something we're happy to talk.
Chancellor, how important is this, given the fact that there have been discussions about financial hubs moving to Paris or moving to Frankfurt or Berlin? How much is it important to get some of these connections in order to boost tax revenue and keep the banking sector in the United Kingdom?
Well, we've had a lot of discussion post-Brexit of people, banks, operations potentially moving out of London, but it hasn't materialized on anything like the scale that people predicted. London has shown itself to be very resilient. And if you look at what's happened in the last year, what we've done in the UK is we've shown we're going to be hungry to keep all that business that's come to London. We are very committed to financial services in the UK. We passed the Financial Services and Markets Act. We are changing the rules for prospectuses and for all sorts of the rules around IPOs to make the London Stock Exchange more competitive. We've got the Mansion House reforms, which is going to unlock a lot of capital into growth businesses from pension funds. So we are really motoring in the UK. We're hungry to attract business all around the world. And this deal with Switzerland is just another step in that direction.
How much are you looking to some of these revenues, though, to be able to enact tax cuts? You were talking about additional tax cuts coming down the pike. Are you still planning that? And specifically, where are you planning to have those tax cuts? Is it going to be with the savings or property, other areas?
Well, Rishi Sunak and I have said that we would like to cut the tax burden more if we're able to do so. But we won't be in a position to do that until much closer to the spring budget. We haven't announced a date for that yet. But, you know, we won't find out what the latest forecasts are from the Office of Budget Responsibility to know whether we're in a position to do that for some time. But we would like to bring down the tax burden in a way that is responsible if we're able to do so. But right now, our priority is to bring down inflation. We had really good news yesterday, 3.9% inflation, beating market expectations by some way. That is because we have shown discipline in government. We've taken decisions that have supported the Bank of England in what they're trying to do with interest rates to bring down inflation. And it's still above target. We've still got more work to do. So that will remain our primary focus.
There is a concern around strikes. There was another strike shutting down some of the train systems recently. That was some of the reports this morning. Doctors are striking again. Are you prepared to start to materially increase salaries at a time when you're still concerned also about inflation?
Well, that's a very important question to ask. And what I would say is, I put it the other way around, actually. I would say the reason why we're having these strikes is because when I became Chancellor, after what Putin did in Ukraine, we had inflation of 11.1%. And people can see their living standards eroding because the price of the weekly shop, the price of filling up the car is going up. So the way that you bring back industrial harmony is to bring down inflation. And that is why it is the primary focus for myself and Rishi Sunak. And when it comes to talking to junior doctors in the NHS or train drivers, we're always prepared to be reasonable, pragmatic and sensible. We've always said we're not going to agree to pay deals that threaten our progress in bringing down inflation, because that doesn't help anyone if you agree to pay deals that mean that next year's inflation ends up being higher. But, you know, we are willing to talk to anyone at any time to try and come to a reasonable solution. And that's why more than 1 million employees in the NHS have agreed to deals, why unions in many other parts of the economy have agreed to deals. And we hope the small number of unions that are holding out will also do the same.
I do want to just finish up from a markets perspective. The markets are now pricing in almost 6 rate cuts by the Bank of England next year as they look at the pace of disinflation. Is that your base case as well?
Well, chancellors never comment on interest rate movements for reasons that you'll understand, Lisa. But what I will say is that I think people will start feeling more optimistic about their own family finances when they can see interest rates on a downward trajectory. And the best thing I can do is to support the Bank of England in their efforts to bring down inflation. And that's what I'll continue to do.
And if inflation goes down, does it give you more headroom to cut taxes?
Well, if debt interest payments go down, then potentially that gives me more headroom and I could use that in lots of different ways, but I would never use it in a way that compromised the battle against inflation.
So that was the Chancellor Jeremy Hunt there speaking to my colleague Lisa Abramovitz. Very interesting, of course, under so much pressure to deliver tax cuts, of course, next year. Some argue perhaps that has more implications, around the general election, maybe what it could mean for the Labour Party. That was Jeremy Hunt then, and our interview with him. So really great to speak to the UK Chancellor, of course. Very important. The shift away from cars, from dirty combustion engines, is running into a new hurdle. Drivers apparently don't want to buy used electric vehicles, and that is undermining the market for new ones too. Joining me now from Berlin is our EMEA automotive industry editor, Stefan Nicola. Good morning, Stefan. I didn't understand this story until you wrote about it. Why are we seeing such a big difference in prices for used electric vehicles versus combustion engine cars?
Yeah, it's really a combination of several things. One, if you buy a used car, you're not benefiting from the kind of subsidies that help sell new electric cars. And then, this technology is sort of rapidly developing and customers are sort of hesitant to buy a used car that may be obsolete in a year or two because batteries develop and charging times get faster. And then there's still customers are still really unhappy with charging infrastructure, which, especially in Europe, isn't yet up to par. So those are a few reasons why EVs are sitting on the shelf, so to speak, and that's why their prices are dropping, and that really is a problem for the entire market.
Yeah, absolutely. So what is the fallout of that then, and the implications for the industry? I mean, yeah, but what does it mean really if buyers are so reticent?
Right. So especially in Europe, most new cars are sold via leases, and companies, the automakers that we all know, and also the car dealership finance these transactions. And if the lease runs out in 2 to 3 years, they recoup some of their money by reselling them on this secondhand market. And when residual values of EVs are so low, some of these companies are losing money because they've expected to sell them for more. So and this is already leading to some rental car firms, for example, dropping certain electric models from their fleet. Sixt, which is Europe's biggest car rental firm, is phasing out Teslas because their residual value has dropped so much. We know that Tesla has made price cuts over the past year, significant price cuts. So, these firms had expected to resell them for, a decent amount of money, but now they're getting very little money for these cars, and that's why they're dropping them from their fleets.
Look, environmental purists, Stefan, would say, it's quite strange for the world to be responding to climate change by getting rid of combustion engines and simply building a whole massive new fleet of electric vehicles. And especially now, if then the secondary market is so challenged, what are the options in terms, though, specifically of that secondary market? I mean, what can the companies do about this, that the values have slumped so much?
Right. Yeah. I mean, they're really in a pickle, to be honest. Some of these companies can sort of funnel these cars into mobility offerings like ride sharing startups or, other sort of offers, mobility offerings. But there really is limited demand from these businesses. So, when you have a combustion car that you can't really sell because it's old or sort of it's in a poor state, these days, it often ends up in Africa, which is part of that market, and that market obviously is largely shot to electric cars because Africa still hasn't a viable charging infrastructure. So at this point, there really isn't much what these companies can do. The hope is down the road, some of these cars can be recycled in a way, taking out the battery and recycling the batteries and maybe resell the battery for energy storage projects. But at this very moment, with the technology developing so fast, these companies are in kind of a pickle.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond. Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts. You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com. Our flagship New York station is also available on your Amazon Alexa device. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak Europe.